Oh, there are so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. It's been more than 50 years since Canada's tax system got a real top to bottom review. 50 years. And according to a report from the Chartered Professional Accountants of Canada, well, that's a massive problem. They're basically saying our system is so tangled and out of date that it's actually holding the whole country back. So today, we're going to dig into their urgent call for a major change. So to really get a handle on what they're saying, we're going to break it down into 5 key areas where the system is apparently failing. We'll look at how we stack up on the world stage, the roadblocks our own businesses are hitting, where billions of our tax dollars are really going, the struggles everyday people face, and then the big one. Is it just time to tear it down and start fresh? All right, let's kick things off with the first big issue, our global competitiveness. I mean, in a world where money, ideas, and talent can zip across borders in an instant, is our tax system helping us win that race, or is it actually tripping us up at the starting line? The report doesn't pull any punches. It opens with a really direct question. See, Canada used to have this major ace up its sleeve. Our corporate tax rates were a huge draw for investment. But things have changed, big time. The question now is, have we completely lost that advantage? And wow, this chart really tells the story. It's a dramatic reversal of fortunes. Just look at those bars. Canada's combined corporate tax rate, the thing that used to give us a leg up, is now higher than the rate in the US and even higher than the average of our G7 peers. That competitive edge we had, it's pretty much gone. And it's not just big companies feeling this pinch. Think about attracting top talent, the best engineers, doctors, tech wizards. Canada's personal tax system is becoming a really tough sell. Our highest tax rate kicks in at a much, much lower income level than in most other G7 nations. So if you're a high-skilled worker, it means you start paying top dollar in taxes way sooner here, which can make working in another country look a whole lot more appealing. Okay, so what's the actual cost of falling behind? What does this mean in dollars and cents? Well, according to a PwC study, the numbers are just staggering. We're talking about a potential threat to as much as $85 billion of Canada's GDP. And get this, over 635,000 jobs could be at risk. That's not just a small problem. That's a massive economic threat. And it really drives home how urgent this is. Here's a perfect example of how this plays out in the real world. You've got a policy like the dividend withholding tax. It sounds complicated, but it's basically a tax on profits that a company sends back to its foreign parent. For a global company like TradeX here, that just adds another layer of cost and complexity. It was enough of a headache that they actually decided not to expand their operations in Canada. It's a textbook case of a tax rule acting like a do not enter sign for investment. Okay, so that's the view from 30,000 feet, the international picture. But now let's bring it right back home. How is our tax system impacting the very businesses that are the engine of our economy? I'm talking especially about the small and medium-sized ones. Well, for a lot of small business owners, the report says the tax system feels less like a rule book and more like a giant, confusing maze. You've got these constantly changing rules, overlapping regulations. It means they're spending way more time and money just trying to keep up with the paperwork instead of, actually growing their business. And that crushing complexity, it hits a really critical spot for our economy's growth, innovation. Now, Canada's main tool to encourage research and development is a program called SR&ED. That stands for Scientific Research and Experimental Development. But what the report finds is that this key program, designed to help, is actually becoming part of the problem. Yeah, this quote from a CPA member just hits the nail on the head. Think about the irony for a second. The main government program that's supposed to encourage innovation is seen as so difficult and complicated that it's actually discouraging companies from even trying to use it. The paperwork, the risk of an audit, it's just too much. And the story of Cortec Engineering really shows the damage this can cause. Here you have a small, innovative company that had to literally cut back on its R&D. They had to scale back their ambitions and even their staff because applying for that SR&D tax credit was just too expensive and took too much time. The very system meant to support them ended up hamstringing them instead.
All right, so let's recap. We've got a system that's hurting us on the world stage and choking off innovation at home. Now, let's peel back another layer, tax expenditures. These are that massive web of credits, deductions, and exemptions in the tax code. It's really just a different way for the government to spend money. But the big question is any of it actually working?
Well, if you ask tax professionals, the verdict is pretty clear, and it's not good. Just look at this chart. A whopping 71% of them believe the whole system of tax expenditures is way too complicated and needs a major, major reform. We're not talking about a few small tweaks here. This is a call for a complete rethink. And this brings up a really crucial point about efficiency. Let's take the GST/HST exemption on groceries. Right now, everyone gets that break, whether you're a billionaire or you're struggling to put food on the table. That costs the government almost $5 billion a year. So the report asks a simple question. Wouldn't it make more sense to give that money directly to the low-income families who really, truly need the help? And this complexity isn't just inefficient. Sometimes it can be absolutely devastating. Take the case of Hemlock Manor, a nonprofit care home. Because of some obscure rule buried deep in the Excise Tax Act, they were suddenly slammed with a surprise tax bill for over $1 million. This isn't some big corporation, it's a charity. They had to delay upgrades, they fell behind on paying their staff, and that directly hurt the seniors they were supposed to be caring for. It's a heartbreaking example. Okay, let's pivot now and talk about the individual Canadian taxpayer. Regular people. For a tax system like ours to work, where we assess our own taxes, people have to believe it's fair, and they have to be able to understand it. The report really questions if we're hitting that mark anymore. Look at this number. $8.7 billion. That was the estimated federal tax gap back in 2014. And what that means, simply, is it's the amount of money the government was owed in taxes that it just never collected. A big part of that is the underground economy, people working for cash. And the report suggests that when the official system gets too complex and people lose faith in it, that underground economy just gets bigger. So what happens when you try to do the right thing and just get a simple question answered? Well, a 2017 Auditor General's report found the service at the Canada Revenue Agency was, frankly, shocking. Get this, in 1 year, almost 2/3 of calls from taxpayers just went unanswered. And if you were lucky enough to get through, there was a 30% chance the agent gave you the wrong information. I mean, how is anyone supposed to get their taxes right with that kind of support? And this kind of difficulty has a huge impact, especially on the most vulnerable people in our society. This statistic is just gut-wrenching. There's a massive gap between the number of adults who qualify for the disability tax credit and the number who actually manage to claim it. The application process itself becomes a barrier, preventing critical financial support from getting to the people it was designed for. And here's the human cost behind those numbers. Kevin's story just puts a face on the data. He was 90 years old, living with Alzheimer's. The mountain of paperwork, the bureaucracy involved in getting the disability tax credit, it was just too much for him and his family to navigate. So they gave up. A system that was created to help people like him ended up failing him, all because it was too complicated. So when you step back and look at the whole thing, the picture the report paints is pretty grim. Our global competitiveness is slipping. Our own businesses and innovators are being held back. We're spending billions on tax programs without really knowing if they work. And for regular people, the system is becoming harder to navigate and easier to distrust. And all this evidence, all these stories and statistics from CPA Canada, they all lead to one single powerful question. Our current tax system was designed for a completely different world, a different economy. So after more than half a century of just patching it up and adding new pieces, in a world that has been totally transformed, the report leaves us with this final thought. Maybe the question isn't if we should review the system, but how soon can we start building one that's actually fit for the 21st century?